SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. My god, I've been pretty rough. You can probably hear it in my voice. Absolute puke-a-thon took place these last couple of days for me, so didn't get to do a Patreon stream. Didn't even manage to even get out of bed to make a video yesterday. It was too much of a wrecked city situation for me, physically, to have made anything. So, without going into too much depth, surprise, surprise, Bitcoin is in more or less the same situation as it was previously. The last video we were making was saying that, look, we've approached the top of this descending triangle on the 4-hourly, which is also where the 200 exponential lives, and a breakout from here would have caused a pretty savage move up, you know, back up into the 20 to 21,000s, which would have, at that point, caused a chain reaction of events. But none of that's actually happened, has it? So, like what I was saying on the video last time, I said, look, if we get the breakout, that is the breakout. But until then, we're at resistance, and look how neat that resistance really was. Perfect test of the resistance. 4 candles in a row, and back down to the range. So, on the short-term time frames, which I'm sure that's all everyone's really bothered about, really. We've got a bit of a box. It's not really as clean as a nice little horizontal, but it is quite small, really. We're talking about 19,000 to 18,800. This is the area now of micro significance, you could say. So seeing ourselves sort of break down from this level would likely cause straight away immediate continuation down to 18,000, and then from there, I guess we certainly are dealing with wrecked city continuation, but that's all it would really suggest in this short term. That's all it would really mean. I'm not looking for major lows to be printed immediately, but it doesn't look good, obviously, breaking down from there and coming down to this bottom range, because obviously then we do actually go into a new range, and that would be perfectly fine to see that, because again, you know, the trend is your friend until the end of the trend. And so far, the trend continues to remain down. We've not reclaimed any moving averages on the higher term time frames, like a weekly, or any of the time frames on any of these, really. So we're just looking for further downside. Now, if we did break down from here, I think we'd probably see a little bit of a reclaiming of, well, we'd probably sink down below the Bollinger Bands ever so slightly and get sucked back up into them. So you might find a wick come down here into the 16, maybe even dip into the 15s, and get brought back up quite quickly into about 17,000. Now, with all of this in mind, you know, what we'd be looking for would be bullish divergence on the higher term time frames, like the weekly, on things like the money flow index, which is quite nicely spotted these significant lows in the past. So low printed there, higher low printed there, with a giant big correction, or you could call it just a crash, really. Nice low here around 6,600 with a huge big dump down, meltdown. Higher low, see, so again, bullish divergence. Now, this is the lowest money flow index read on this chart, and I've back tested it. It's the second lowest in history. So to imagine it going down even lower than this, well, it's not impossible, but it's highly unlikely. So if we were to crash all the way down to wherever it might be, 15, 14, 12, wherever, and maintain bullish divergence, especially if it looks like a crash, it's one of these ones that I would say probably marks the absolute low, really. An unreasonable, historic, crashing low. But obviously we've not got that yet, but we do have the precursors on the MFI to suggest that that's what that would read, and it would be an opportunity worth buying into. From an investment standpoint, although buying into something like that, historically, it hasn't given the greatest read to get immediate gratification, not at the end of a bear market. It did this time, immediate bounce back and then going on to new all-time highs. So pretty impressive stuff. Again, there's a different market around here. It's a similar market to this one, although it is a very unique situation given the global situation with all economies dribbling down the drain and geopolitics and lack of liquidity, and all, you know, is a very different scenario in many ways than any of these charts represent, you know, on price action. But even so, it doesn't mean that we can't take this chart on face value. We certainly can, and we can see, even like I say, from the 4-hourly time frames, TA seems to still be working, and so we should just respect the fact that we do have a chart that does respect its TA, even if it's not the way that you want it to be. So yeah, easy enough said. A closure below 18,800 would probably melt down all the way down to 18,000 and probably beyond then. But closures above this trend line, which currently marks the bottom of this box, so we're talking 19,500 and especially 19,750. Yeah, that would have continuation to the upside to a dramatic effect. So it doesn't mean that we just have to go down, but at the moment we're still very much range bound. Boring. So if there was a time to be laid up, throwing up into a sick bowl like I was, I suppose now's the time to do it, because there's really nothing going on in this chart. Why should there be, when the whole world is waiting on watching to see what the Fed are going to do, which, they've already said more or less what they're going to do, so we should expect them to continue with that trajectory, which doesn't bode well for any major upside. However, TA is TA. Sell orders and buy orders and walls and whatnot, they do count for something, and there would be a melt up, I would imagine, if we were to break outside of this descending triangle. If we break out of it and start closing candle bodies above 19,750, we can see ourselves incrementally moving back up. I'd say my first major target would probably be around 21,000, and then this area here, 22,700. But for the moment, my bias remains as the trend, because that is my trading strategy. It's momentum and trend, and so you can't deny that the trend on the 4-hourly, the daily, or the weekly, the trend is still certainly one of a downtrend. So let's respect that for what it is. But there are ways to invalidate this downtrend, even if it's just on the short-term time frames like what we're seeing here. But for the moment, there's no invalidation. It's just continuation. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day, and take it easy.